Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today I'm going to be introducing you guys to charting patterns. Charting patterns are used in order to kind of see how a stock is going to move and just ways that we can make trades, especially seeing that now we've been doing a lot of options trading to see how a stock is going to move. So before we get into it, I want you guys to take a moment, like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. All right, so let's start. All right, so as you see here, I got a nice little thing I found on Google, a little cheat sheet, right? Chart patterns cheat sheet, and it has different patterns on it. So reversal chart patterns, continuation chart patterns, and it's really important to kind of know these things because if you're trading options, if you're trading stocks, day trading, just mainly short-term day trading or scalping, you want to become familiar with these things because they give you good times to know whether you're going to choose a call option or a put option or anything else. And these are actually determined by things that people have seen throughout the history, right? So while trading stocks, these are different patterns that individual traders have noticed and they take note of them and they just give them the right attention that they need. So here you see our first one, we have a double top, right? A double top. You see it comes here, comes back down, comes here. The top is level. It comes down. So this right here is where you know, okay, hey, a put, because this thing is going to continue to come down. This is a bearish signal, right? A bearish signal. The double top, it is a bearish signal. So here they actually tell you, okay, put your stop loss here, set your entry here, and this is your target price to get out. So you want to enter here. You're going to put your stop loss here so that if you don't lose a large amount of money, and this is your target. So this is where once it hits this point, you can choose to get out if you would like, but this is where your profits are going to be made on a put option. We have a head and shoulders. So look at this, head and shoulders, right? You see the shoulders, you see the head here. And again, this is another one of those bearish patterns, a bearish pattern. So you see the stock will come here, go up to the head. Almost looks like it's gonna go up, continue going up, but instead it drops back down. You see the neckline here, and then goes back up and it continues to drop. Put, this is the sign for a put option. You have your stop loss, your entry, and your target price on every time. Again, bearish. So you have to be sure that you're paying attention and watch for these types of signals because these let you know, hey, let me set up a put option for this. Don't be tricked by the fact that this thing is going up and you see it, okay, it looks like it made a higher low, but instead you get your neckline and it actually continues to come down. So I know it had a higher low, higher high, okay, about equal higher low, right? It did not change characteristics, and it came back here, so a lower high, and it continues to come down. So head and shoulders, again, good put option opportunity. Rising wedges. Now, although this thing looks like it's going up, and again, this is why these are called reversal chart patterns. A rising wedge, you see the wedge here, looks like it's going up, but instead it stops here, and it continues to come down. So pay attention to these things, and these can be traded on pretty much any time frame, I believe, but the ones I mainly use, the 1 hour, the 4 hour, and the 1 day. So if I'm charting out for my next day, what options I'm going to be looking at and my different price targets for a stock, I always set up start by using my 4 hour or my 1 hour or my 1 day. So all of those can be used. You can also come down to smaller time frames, but the way I keep it in mind, if I want to be in and out of a trade within a matter of minutes, I use the minute time frame. If I want to be out in a couple hours, I use the hour time frame, so on and so forth. So you got to keep those things in mind. Again, another bearish signal. So down here we see some bullish signals, right? So it looks like this thing is coming down. It's a double bottom. We have our double bottom here. Look at this. So it looks like it's going to come down. It actually comes back up, and then it comes back down. Again, you see here, right? Two bottoms, and they're equal. You see your neck here, and then this is your stop loss. This is your entry point, and this is your target. You expect this to continue going up. This is a bullish signal. Bullish signal. You have to pay attention to these things. We have inverse head and shoulders. You see your shoulders here. You see your head. So it's coming down, comes up, comes back down. Looks like it has a new lower low. Instead, it comes back up. We get our neckline, a higher low, and it's going to continue going up, right? So this is almost like a W. Continue going up, bullish signal, inverse head and shoulders. Here we have our falling wedge coming down. We see our wedge here. Things are trading within this time, within this price range, and then all of a sudden they take back off. They take back off towards the top. Falling wedge. So I will tell you, I often look for all of these signals, right? Here in the continuation pattern, things kind of change, but for these reversals, I always make sure to keep those in mind because I hate to get caught holding the bag. The one thing I liked about this chart the most was it told you, hey, you need to have a stop here, because if it comes back below this, that means this thing could possibly continue going down. So it tells you to have your stop loss, not here at the low point, but in the middle. It tells you, hey, you need to set your entry after it breaks this high, right? And you continue going. Target is about the same point here. So always pay attention to your stop, your entry, and your targets, because once you hit your targets, your price targets, that is where you want to start scaling out. You want to start selling those options. You want to start taking money out or taking all of your money out. I know sometimes it's hard to be greedy, but your targets are there for a reason. You always need to go into your trades with a goal. So your target is usually your goal to get in, get out. So here, let's continue on. We have continuation chart patterns. Here we have a falling wedge. And you know, we had two different falling wedges, right? You see this falling wedge, which is coming down and going up like that and trading within this price range, but this falling wedge is going up and then trading within this price range. But it's a bullish signal still. It is still a bullish signal. So we have our stop loss, our entry, and our target for this falling wedge. Going up, trade within this price range, and it continues to shoot up. Here you have a bullish rectangle. You see it trading pretty flat. Now, one thing I like about this is, guys, oftentimes, like on big companies like Tesla, for instance, last week you guys saw me trading Tesla a lot. I traded in between these two lines. So I did not wait for the up or the downs. I just basically traded, because you see bullish rectangle, you see you have a bearish rectangle. I traded in between these two. I saw that it had a high of a 1020 and the low of a 1010, and it kept going up and down between those price ranges. And eventually it kept coming lower. It had a new lower high of 1015 and it had a lower low of 1005. So I started trading that range on options. But due to these charting patterns, I was able to recognize that and see that it was trading within range and make my money by trading that top and that bottom. Have your stop loss here, your entry, and your target. Have a bullish pennant. Now, bullish pennant for me is sometimes hard to recognize because it looks very similar to the wedge. Only thing is, you see it has a smaller trading pattern. trading price range. So you can get confused between this bullish pennant or a rising wedge or a falling wedge. And I don't really trade this one. I don't try and figure it out often. It's kind of hard for me to recognize, but you guys may become better than me and learn how to do these things. So we have a bullish pennant. Thing comes up, trades within this range, and it shoots up. It's anticipated to shoot up. Now again, these things have been proven throughout history that this is how they trade. So we want to pay attention to these because we want to potentially get in at the best price. We don't want to wait till it gets up here at our target to try and enter. We want to wait. We want to get in here at a good entry price. And also, you want to always make sure it hits a retest. So even if it comes here past the entry, you want to wait till it pulls back a little bit. If you see that entry shows some support, you get in, and you should definitely see it go up from there. So a retest is it goes up, comes back down to your entry point. You see it does not go below your entry point. You get in at that point, and it should take off to the moon as a bullish pennant. We have our rising wedge. Again, this is a bearish pattern, bearish trading signal. So similar to the other rising wedge here, except you see this one goes up and then comes down. This one actually comes down and trading up and then goes all the way down. So a rising wedge comes down, trades within this price range. We have our stop, our entries, and our targets. Becoming familiar with these trading patterns really improves your game, right? It really improves your game. It gives you you can literally look at the charts and see what is going to happen next, and you can kind of predict, okay, hey, am I trading calls or puts today? Also, you want to make sure you're looking at how the market is trading by looking at things like the SPY or the Dow or the NASDAQ or whatever the case may be, but I use the SPY at all times. That's what I use, right? SPY. We have another bearish rectangle. The opposite of our bullish, comes down, trades in the range, and continues down. We have our bearish pennant coming down, looks like it's trading within a range and continues down. The opposite of our bullish pennant though, right? You see that? Comes up, trades down a little bit, and then finally takes off to the moon. Comes this one comes down, trades within our price range, and continues to come down lower to new lower lows. So those are very important. Now these bilateral patterns, these right here, I try not, these just basically tell you that, hey, the market can trade in either direction. So that's a center triangle, can go either up or down, although it looks like what? Looks like this falling wedge, or it looks like the bullish pennant, right? Looks like either one of those, but it's in the center triangle. The descending triangle is the same thing, and the symmetrical triangle is also the same thing. So you have to be aware of those things. One thing I'm going to show you guys today is how I kind of traded Tesla. So we're going to look at Tesla as a quick, give us an idea. So what did Kelvin see? What did Kelvin do? And we're going to go through that and just kind of get an idea. See how these patterns actually work. See how I used it to make successful trades, make a few $100 or $100 a day, and we want to continue on that way, because that's how you learn consistency, right? We're paying attention to these patterns, making successful trades, putting things on your watch list and things of that nature. So let's get out our Webull and let's start. All right, so we have our Webull up and we have our chart, and you see here this is Tesla, and Tesla pretty much starts here right on Friday. This is the start of Tesla on Friday. It was coming down first thing in the morning, then it comes up, comes back down, comes up. You see it's trading within a range. So let's go ahead and pull us out some drawing tools. And where I started trading was probably right about here. I started trading here, and that was my top. So I'm gonna change the color on that. You see here, and I use Webull to actually chart most of my stuff. There are plenty of other tools out there. You can use TradingView or TD Ameritrade, which I like TD Ameritrade as well. You see this is a good low. You can use TD Ameritrade as well. So you see we got a red line and a green line, and many other points in between there, right? So you see that one there. We see, let's see, different points. Again, I'm going from low to high every time. I watch the trade between there and the 1010. So this, and I'm actually gonna start with a simple, right? I'm gonna start from the top to the bottom, which is the first point where I was trading. So I'm gonna delete that one and that one. So initially I saw this thing trading here between here and here, and this is the 5-minute time frame, as you can see down here. Like I said, you can use different time frames, but that day I kind of got up late, had to be at work, and I just kind of traded in this range. I saw based on back here, see, even back here I saw it at 1020, trade down here to about 1010, traded back up, and you know, just constantly doing that. Now I had a higher high here, but I also saw it come back down, and I even knew for this one, like, okay, hey, high spike up, and I said no, this thing's coming back down. So I knew that it was put options because I was looking at how the market was trading. So the SPY was actually trading down this day, so I just kept paying attention to that. So I think here was my first entry on Friday. I want to say this was Thursday I was trading this, maybe. But either way, Thursday or Friday, I saw it coming down. I saw it get to here to 1010. I sold. It came back up. It got back to 1020 again. I said, okay, let me get another put option. Came back down to the 1010. I sold. And here is actually where it started making new lower lows, right? I saw here, I was like, oh, change of character. So it's now going to start making new lower lows. So I mark me a new line there. At that point, I was like, boom, okay, this is a new lower low for me. And I was like, okay, so let me change the color on this, right? This is our new lower low. I mean, a lower high. This is our new lower high. And this is our lower low. So I'm going to remove this line now. I said, boom, so now the new lower high is 1013. It's about 1015. So when it gets to that point, I'll buy a put option, wait till it come back down. And also you can do this opposite way, right? So you could have traded a call option. You could have traded a call option up to 1020, came back to 1010, got out, whatever the case may be, you know, call option down here, got to the top, you sell, get your put option, come back down, sell, and you know, just back and forth. However, I did it one direction because I knew the market was coming down. So in order to play it safe, I did not trade any call options. I only traded put options on this day. I saw my new lower high. I was like, okay, boom, let me get a put here. put option here. It came down to that 1,002. I got out. Went back up to the 1,015. I got in a put option. Came back down to that 1,002. I got out. Came back up here to that 1,015. Got a new put option. Came down here to 1,003. Yeah, 1,003, 1,004. Got out. That's 3 successful trades. Each could have potentially gained you a couple $100. All trading within the same range, right? Easy money, right? Easy money. So these are ways that those patterns can be very beneficial to you. Again, you saw this is what. Let's look at pull up our patterns. Let's pull up our patterns again. This one was a bearish rectangle, right? A bearish rectangle. So you see this bearish rectangle, and look at this chart. Bearish rectangle. It started here, going up and going down, came down, bearish rectangle. So that is how charts and trading patterns can become useful to you. There are many more out there that you can go out here and find, look up yourself, but those are the ones that I primarily pay attention to and look for when I'm doing trades, day trades or option trading. So hopefully you guys learned something from that. If you have any questions, let me know in the comments. I thank you for joining the Journey to Become Wealthy. Please be sure to like, subscribe before you leave out, and I'll see you again later.